What's going on? This is Marcus and you're at the channel of the DebtFree Dad. In today's video, we're going to talk about the monthly investment challenge. We're going to take a look at the 3 investment vehicles that I started. And first of all, the overall goal of the monthly investment challenge was I wanted to normalize investing. We wanted to make sure that people aren't scared to invest and show that you can take small amounts of money to get started. It's all about consistency and time. If you got consistency and time, you can be successful in the marketplace. So we're going to talk about our 3 investment vehicles that we started in February. We're going to talk about the Acorns. We're going to talk about the crypto portfolio on Coinbase. And we're going to talk about the individual stock portfolio in Webull. If you're interested in using any of those vehicles to start investing, there's a link in the description below. You get something free, I get something free if you start using it once you make your initial deposit. I will tell you, if you are interested in investing, you do not have to use my link. You can use the link of your favorite YouTuber, your friend, your family member. I just want people to get started in investing and not be scared of the process. Go ahead, put that toe in the water and get started. As always, if you're interested in following my debt-free journey and learning about finance, I invite you to subscribe to the channel, hit the like button and ring that bell below so you can get notified of new videos, and it'll help this video reach out and reach more people. So definitely subscribe, become a part of the intellectual savage community. I hate to be the bearer of bad news, but I gotta tell y'all about something I did in the investment portfolio it's outside of what my normal investment character is. Anyone who knows me, y'all know I'm a moderate to conservative investor. I like funds. I think those are the easiest way to go. I like funds. I like real estates, 401ks, IRAs, index funds, ETFs. I'm kind of a fun guy. I think individual stocks are good. My thing is, I just don't like doing all the research and all the detail needed to really focus on individual stocks. But I have been dabbling in it since I started the monthly investment challenge. And I have dabbled in single stocks before. I'm not foreign to it, but it's just not what I would recommend to someone who is new to investing. But I'm going to tell y'all about something I did on the investment side of the game. Y'all going to see it when y'all get to it. It's either going to be another success or another failure. But in any event, whatever it is, you'll know, you'll follow me on the journey. Tune in to find out what either stupid or genius move I made. Let's jump in and talk about the portfolios. Alright, now that we're at the table, we're going to talk about the 3 investment vehicles that I have where I started the monthly investment challenge. So, with that being said, let's dive right in to the first investment vehicle, which is the investment vehicle that I recommend for anyone who's new to investing. It's easy. You can set it up on autopilot to invest $20 a month, $30 a month, $100 a month. You can set up an investment portfolio for your children. Very easy to use. Takes all of the hassle out of not having to, you don't have to worry about looking at companies and doing research and looking at 10K SEC quarterly reports of companies and all that nonsense. The Acorns account, we started in February. We contributed about $100 more or less a month from February until now. We contributed a total amount of $530 into that portfolio. And the Acorns account current value is $603. So we are making consistent gains. Remember, with Acorns, like I talk about in all of these videos, it gives you a wide variety of exposure to different areas of the market. So you have your tech stocks, your Googles, Facebook, Microsoft, and you also have your investments into foreign corporations like Alibaba, Samsung. But it gives you a nice even play where you don't have to worry about selecting stock. Okay, so that's Acorns. Next we're going to talk about the portfolio that currently makes me, just gives me a headache. At one point, this is probably why I didn't do a video last month. Not purposely, but just subconsciously. At one point, this portfolio was at about $5,000. Now it's at we'll just talk about it. Okay, so we're going to talk about my crypto portfolio and my Coinbase account. So far, I contributed to the portfolio $2,467 that's spread across various cryptocurrencies. The current portfolio value is $2,224. So Right now, I'm clearly taking the L. Let's take a look at some of the major holdings that I have that I contributed to. Bitcoin, I contributed $1,000. So that current value is $804. As we all know, Bitcoin's been getting body slammed. I did a video where I talked about that and why I'm not really tripping over it. Ethereum, I have $1,132 invested. The current value is $1,110. The next currency that I'm holding is ADA Cardano. I have $150 invested in Cardano, and the current value is $140. Next up is Stellar Lumens XLM. I have $85 invested. The current value is at $73. And finally, I invested in Anchor, ANKR. I invested $100 in Anchor, and the current value is worth $71. Those are the only cryptocurrencies that I actually invested in. I do hold several other cryptocurrencies, but those are cryptocurrencies that I earned from Coinbase that were at no cost to me. Essentially with Coinbase, when you open an account, if there's a cryptocurrency that they want to kind of get the word out about, they'll give you an opportunity to take a 3-minute quiz, answer a few questions, and when you answer a few questions right, they give you some free cryptocurrency, so that'll help build your portfolio up. So that's where we are. Now let's get to the talk of the town. We're going to talk about the Webull portfolio. The Webull portfolio is really interesting because this was really kind of the initial basis of the monthly investment challenge. After I tell y'all what I did, it turned into something else. But in any event, the Webull portfolio was really the backbone of the monthly investment challenge because I was really focused on just growth stocks that I believed in, and dividend stocks. And so in February, we started that portfolio contributing $100 a month. Early on in the year, we were purchasing AMC, Carnival. We were really looking at those things that we knew had a strong likelihood of bouncing back once the pandemic was kind of coming to an end and people were allowed to go out and things were opening back up. We also invested in AT&T, a great dividend stock. They had HBO Max. People at home watching HBO, watching all the movies that are going straight to HBO. We also invested in Genworth Fund, which is an insurance company. I was able to purchase a share of Apple, and I purchased a few shares of Pfizer, which is a great dividend stock. It's under $40. So that's kind of where the portfolio rounded out at. So let's talk about the current portfolio value. The current portfolio value is portfolio value, and the screenshot may be slightly different because with these portfolios they update currently, even with the Webull portfolio due to after hours market that ends at 9. And you all are seeing this the day after I recorded it. So the numbers on the screenshot may slightly be off from what I'm saying, but more or less this is the ballpark. That's number one. Point number two, I know y'all thinking, hey, well, Marcus, how in the hell did you start the monthly investment challenge, investing $100 a month, starting from February, and how do you have a balance of $2,790? Well, first let me talk about it. I invested, wait, let me go into the background. Last month I didn't do a monthly closeout, but last month and this month were really unique. Last month was a 3-pay period month, so we had additional income. Some went to the emergency fund, some went to various sinking funds, some went additionally to pay towards student loan debt. This month we received a tax return as well. Some went to the emergency fund building, some went to various sinking funds, some went to pay for expenses that we knew we were going to incur. But with these 2 unique months, we had a little bit of wiggle room, and so I got the authority from the boss or from the missus to, hey, make a few investments in some things that I wanted to make an investment in. So I did invest heavily in AMC. Now let's talk about AMC. You're like, why the hell did you invest heavily in the movie theater stock? Well, first and foremost, before all I guess it was always talks of an AMC squeeze and the price potentially going up. Early on, I thought, worst case scenario, AMC stock would get back to pre-pandemic levels at some point. As the capacity at facilities and indoor arenas expanded from 10% to 25% to 70%, I knew that people wanted to get out. And the minute that first Marvel movie dropped, it's going to be a wrap. So I started investing in AMC in February at about $9. So I made purchases in AMC from February until current, buying in at prices from $9 to $8 to $12. And the latest purchase I think I purchased that was about $17. So that's how I got here. Why did I get here? Well, I'll say this is probably a little bit more outside of my investment character, but there is likely going to be a short squeeze on AMC that is going to drive the price up, or that has been driving the price up. If you all haven't been looking, if you own AMC stock, look at your AMC stock. It went from $12 to now at about $26 in the blink of an eye. This is how a short sale works. You have three players. You have the broker, you have the hedge fund, and you have the marketplace or the buyer. So this is essentially how it works. The individual in the middle, the hedge fund, goes to the marketplace and says, hey, Marcus, you looking to buy some AMC stock? I'm like, yeah, I think I want to buy some AMC stock. Well, and this is just example so you can get an idea of how people make money in shorting a stock. Well, this hedge fund says, all right, Marcus, here's what I'll do. I'll sell you 10 shares of AMC stock for $50. So me, not knowing anybody, I say, okay, 10 shares at $50, $500, that's a deal. Well, here's the problem. The hedge fund does not actually have the stocks to sell. So what the hedge fund does is the hedge fund goes to the broker and borrows the 10 stocks of AMC. He borrows 10 shares of AMC stock. So now I take those, the hedge fund, not me, now the hedge fund takes those 10 borrowed shares of AMC stock, sell them to me in the marketplace, Marcus. The hedge fund sells the stocks to me for, hey, here you go. You bought 10 shares, $50 a share, $500. So now, me in the marketplace, I got my 10 shares of AMC at $50 a share, $500. Now, here is how the hedge fund makes money when they short a stock. They've already bet that that stock is going to go down. So let's say that stock price goes from $50 a share to $40 a share. Now, as the hedge fund go back into the marketplace and says, hey, investor Marcus, that stock you got lost money. It's only worth $40 right now. So I'll buy those 10 shares back from you, $40 a share at the market price of $40 a share. So I say, okay, I want to get rid of them. I'm losing money. I sell those stocks to the hedge fund for $400. The hedge fund, now that he got those 10 stocks back, remember, he sold them to me for $500. The value went from $50 a share to $40 a share. So I sold them back to the hedge fund for $400. Now the hedge fund goes and gives the broker his 10 shares back at $40. Well, the middleman, the hedge fund, just effectively made $100 because he made the difference from the $500 on the initial sale to me and the $400 purchase when he bought the stocks back from me to give them back to the broker. So now that's how hedge funds make money on shorts. They borrow the stocks, they sell them at a certain price, that stock price decreases and goes down, they buy those stocks back at a lower price, they return those borrowed shares back to the hedge fund at that lower price, and the difference between the price that they sold them for and the price they purchased them for, the hedge fund keeps. Now this is how a short squeeze essentially happens. That same exact scenario, but instead of those AMC shares going from $50 a share, that same exact scenario, but instead of those 10 AMC shares going down from $50 a share to $40 a share, let's say in the same example, the price of those stocks went up from $50 to $100 a share. So what happens is, because people have wind and knowledge that a company, a hedge fund is doing a short squeeze on the stock, what happens is with Wall Street Bets and YouTube and all these mediums where people can communicate, they can infuse money into that stock, raise the stock price up, and now that hedge fund, as that price goes up, is actually losing money because they're looking they can only make money when the price goes down. So in that same exact example, let's say the price went up to $100 a share. Hey, Marcus, I'll sell you these stocks, 10 shares of AMC for $50 a share, $500. Okay, I take the deal, he sells the stock. A week later, those AMC stock goes up to $100 a share. So now those 10 shares are worth $1,000. Here's the catch. The individual, the hedge fund, that person in the middle, borrowed those shares from a broker. So essentially, as that stock price increases, because people are buying into the stock, buying into the stock, buying into the stock, the hedge fund has to return those shares. So the hedge fund has to buy those shares back so he can return them to the broker. And the hedge fund is going to pay market price. So what happens is a bunch of people start infusing cash and buying shares of AMC, and they're holding on to that AMC stock. They aren't selling their stock. The hedge funds are looking to cover their losses. So now they have to go back into the market and buy those stocks back so they can pay the broker back. But essentially, the price is just going up, 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 up. And no matter how high that ceiling goes, the hedge funds essentially have to pay that price because they have to return those shares. And so now you'll see the stock price start to increase. The stock price will go up because people are buying in. The stock price will start to go up because hedge funds are scrambling to buy shares at these high prices to cover their losses so they can return those shares back to the broker. You see the media start talking about AMC and its upward trajectory. Now people have a little bit of fear of missing out, FOMO, so they want to jump on board. So all of these things increases the price of the stock, and it really screws the hedge funds because, again, the more the price of the stock goes up, the more money they lost, and they're at the whim of the market because they have to buy those shares back at some point to cover their losses on the borrowed funds from the broker. That's essentially how short squeeze works. So I wanted to get in the game on this short squeeze. I'll tell you, again, like I said, I started buying at 9, 8, I bought some at 12, I bought some, I think the highest was at 17. Essentially, so far I've invested $1,322 into AMC. I have 89 shares of AMC. Currently, that AMC portfolio value is at $2,362. If you see the movement has been crazy. It's been something crazy, like I had like maybe a 30% gain just today alone in AMC. And so I'll tell you what my strategy is with AMC. I'm going to hold it for a while. I'm not buying any more AMC shares, but I am going to hold because I want to ride this up to see how far this short squeeze can go. Now, as it relates to exit strategy, remember when I talked about how short squeezes work and how hedge fund makes money from shorting a stock, but how they lose money and them losing money causes that stock price to rise. Essentially, the more people hold on to their AMC shares and don't sell, the higher it will drive the price because the hedge funds can't purchase the shares that they need to cover. So that price is driving up because people are investing, more people are investing, people are seeing the stock price rise, they have a little fear of missing out, so it's just going and going and going. Smaller hedge funds are buying it back at these higher prices, and these large hedge funds will have to buy it back at these inflated prices at some point in time. Now, with the short squeeze, here is the ultimate catch. It's like a peak and valley. You'll see the short squeeze start at a low number like $48 and it rises, for example, to $500. Then it could come back down to $100. And so you have to have some exit strategy with regard to how you want to play these short squeezes. There's really no ceiling on how high you can force or how high a stock price can go with regard to a short squeeze. But my advice to everyone is do what's best for you. I plan on holding. I'm going to try to ride this thing out to see how high this short squeeze happens. But I do have an exit strategy. I do have numbers in my head where, well, if this stock price reaches this point, I may sell these few shares to get my initial investment back and some profits and let the ride. I do have a game plan, but at the end of the day, you have to have the game plan. If anybody is playing this AMC, I look at AMC and this short squeeze the same way I kind of looked at Dogecoin. But I hope I explained that well. There are a lot of guys out there who just do AMC videos every day, every hour, AMC live streams. So if you want to know more about it, just do some open source research. You'll find a lot of guys out there talking about it. I'm not telling anybody to buy AMC. Everyone is their own boss. Everyone is their own chief executive officer, their chief financial officer. So you do the moves that are right for you and your portfolio. With a play like AMC, with a play like Dogecoin, I would just tell everybody only invest what you're comfortable with potentially losing. This thing could, it could not be profitable, and you have to be in a position where you're ready to potentially eat a loss. So that's where I'm at. That's how the Webull portfolio got really high. As always, I appreciate you all tuning in. Take a look at these videos right here. Check them out. Hey, they're about my financial journey, my debt-free journey, and definitely hit this link in the middle. If you're not subscribed, get subscribed so you can become a part of the Intellectual Savage family. I want to see everybody win, eliminate debt, get into investing in safe ways that can make them consistent money in the long run. And if you're feeling a little froggy, you're a little bit stable, you got your little emergency fund in place, then you can take some risk into those more volatile things. And at some point, I hope to report back that it was either a success or utter and complete disaster. But I'm going to keep y'all posted. I'm going to show y'all the numbers. I'm going to show y'all what's going on. Y'all take care. Be blessed. Peace.